True or false? Budgeting is the act of estimating or allocating revenue and expenses over a period of time. The answer is true. Budgeting is the act of estimating or allocating revenue and expenses over a specific period, typically monthly, quarterly, or annually. It helps individuals, businesses, and governments plan how to use their financial resources efficiently, anticipate shortfalls or surpluses, and make informed decisions. True or false? Camilla holds the position of Chief Accountant and reports directly to the President or Chief Executive Officer while overseeing the entire finance organization of the company. False is the correct answer. In most organizational structures, the Chief Accountant typically reports to the Chief Financial Officer, CFO. The CFO, in turn, reports to the President or CEO. The Chief Accountant focuses on financial reporting, compliance, and accounting operations, while the CFO oversees strategic financial planning, investor relations, and overall financial leadership. True or false? Dina works at ABM Incorporated and she is carefully analyzing where to put the excess cash of an organization. She is carrying the role of finance in ensuring that there will be a regular and adequate supply of funds. The statement is false. Dina's action of analyzing where to put the excess cash of an organization falls under the key objective of invest in safe, profitable ventures. This is part of the financial management role of allocating funds, not the procurement of funds. True or false? Financial system links potential savers and borrowers by channeling funds through financial markets and financial institutions using financial instruments. The answer is true. The financial system serves as a vital link between potential savers and borrowers by channeling funds through financial markets and institutions. It enables savers to invest their excess funds and allows borrowers to access the capital they need. This process is facilitated by financial instruments such as loans, bonds, and stocks, which help transfer funds efficiently. By connecting these parties, the financial system supports economic growth, resource allocation, and financial stability. True or false? Markets for short-term securities are called money market while markets for long-term debt and equity are called capital market. The answer is true. Markets for short-term securities, typically those with maturities of 1 year or less, are known as the money market. These include instruments like treasury bills, commercial paper, and certificates of deposit. In contrast, markets for long-term debt and equity securities such as bonds and stocks are referred to as the capital market, which supports long-term financing and investment. True or false? The statement of cash flows is a financial statement that shows the company's earnings for the specified period. The answer is false. The statement of cash flows does not show a company's earnings, instead, it details the cash inflows and outflows over a specific period. It is divided into 3 sections: operating activities, investing activities, and financing activities. Earnings are reported in the income statement, while the cash flow statement focuses on actual cash movement, helping assess liquidity and financial flexibility. True or false? Varga bought stocks from Abama Corporation a year ago and decided to sell her equity now. The market where she can sell her share of stocks will be the primary market. False is the correct answer. Varga will sell her stocks in the secondary market, not the primary market. The primary market is where securities are sold for the first time, usually by the company itself to raise capital. Since Varga is reselling shares she previously bought, her transaction takes place in the secondary market, where investors trade existing securities with one another. True or false? Financing decisions in financial management are made from the ordinary results of business operations. False. Financing decisions are not made solely from the ordinary results of business operations. Financing decisions involve determining how a firm raises capital, whether through debt, equity, or internal funds. True or false? Financial management primarily concerns itself with the sourcing, allocation, and control of human resources in an organization. False. Financial management is not primarily concerned with the sourcing, allocation, and control of human resources in an organization. Instead, it focuses on managing financial resources, making decisions about how funds are raised, financing, where they are invested, investment, and how profits are distributed, dividends. It also involves financial planning, budgeting, and controlling to ensure the organization's financial health and sustainability. While human resources are vital to any organization, their management falls under the domain of human resource management, not financial management. True or false? Disposal of surplus funds in financial management involves dividend declaration. True. Disposal of surplus funds in financial management does involve dividend declaration. When a company earns profits and has surplus funds after covering operational needs and reinvestment plans, financial management must decide how to dispose of these excess funds. One common method is through dividend declaration, where a portion of the surplus is distributed to shareholders as a return on their investment. This decision is part of the firm's dividend policy and reflects its approach to balancing reinvestment with rewarding investors. Part 2. Classification of cash flow activities. For each transaction, choose two answers: the correct cash flow activity category, operating, investing, or financing, and whether it is a cash inflow or outflow. Choose two answers: the correct cash flow activity category, operating, investing, or financing, and whether it is a cash inflow or outflow. Kevin's school-based mini-business decided to buy another student-run shop to expand operations. A. Operating activities. B. Investing activities. C. Financing activities. D. Inflow. E. Outflow. Correct answers: B. Investing activities. E. Outflow. Kevin's mini-business buying another shop is an investing activity because it involves the acquisition of a long-term asset to expand operations. Since the business is spending money to make the purchase, it represents a cash outflow. 12. Trisha's class sold shares of their school enterprise to raise money for a new product. They received cash from the sale. A. Operating activities. B. Investing activities. C. Financing activities. D. Inflow. E. Outflow. Correct answers: C. Financing activities. D. Inflow. Selling shares to raise money is a financing activity, as it involves obtaining funds by issuing equity. Since Trisha's class received cash from the sale, it is a cash inflow. This helps fund new projects or expansion. 13. To lower future loan payments, Jerome's group refinanced their school project loan and paid fees related to the new terms. A. Operating activities. B. Investing activities. C. Financing activities. D. Inflow. E. Outflow. Correct answers: C. Financing activities. E. Outflow. Blue Book explanation. Refinancing a loan is part of financing activities, since it changes the structure of debt. Paying fees for the new loan terms results in a cash outflow, as money is spent to secure better future payment conditions. 14. Alyssa earned fees for services provided. A. Operating activities. B. Investing activities. C. Financing activities. D. Inflow. E. Outflow. Correct answers: A. Operating activities. D. Inflow. Earning fees from services is part of operating activities, which include the core business functions like providing goods or services. Since Alyssa received cash for those services, it's a cash inflow. 15. Miguel's team places idle funds in a short-term investment vehicle and earns interest income. A. Operating activities. B. Investing activities. C. Financing activities. D. Inflow. E. Outflow. Correct answers: A. Operating activities. D. Inflow. Interest income from short-term investments is typically classified under operating activities, especially when the investments are part of the entity's cash management strategy. Since Miguel's team earned interest, it represents a cash inflow. Juan received the principal amount back from a small business owner he lent money to last year. A. Operating activities. B. Investing activities. C. Financing activities. D. Inflow. E. Outflow. Correct answers. B. Investing activities. D. Inflow. Juan lent money last year, which was an investing activity essentially, he invested in another business. Now that he's receiving the principal amount back, it's a cash inflow under investing activities, since it relates to the recovery of funds from a prior investment. Ella's enterprise settles monthly interest obligations on previously acquired capital from an educational funding institution. A. Operating activities. B. Investing activities. C. Financing activities. D. Inflow. E. Outflow. Correct answers. A. Operating activities. E. Outflow. Interest payments, even if related to financing, are typically classified as operating activities, because they represent the cost of borrowing and are part of the enterprise's regular financial operations. Since Ella's enterprise is paying interest, it's a cash outflow. Remember, if the payment were for principal repayment, that would fall under financing activities. But interest is treated as operating. 18. Louis leads the repayment of the full principal amount on a loan taken for the senior fair project. A. Operating activities. B. Investing activities. C. Financing activities. D. Inflow. E. Outflow. Correct answers. C. Financing activities. E. Outflow. Repaying the principal on a loan is a classic example of a financing activity, since it directly affects the capital structure of the enterprise. Because Louis is paying back the full loan amount, it's a cash outflow. Remember, interest payments equals operating. Principal repayments equals financing. 19. Purchase of land or real estate properties. A. Operating activities. B. Investing activities. C. Financing activities. D. Inflow. E. Outflow. Correct answers. B. Investing activities. E. Outflow. Buying land or real estate is an investing activity because it involves acquiring long-term assets that will benefit the organization over time. Since cash is spent to make the purchase, it's a cash outflow. 20. Noah's group used some of their income to buy back shares, preferred stock, they had previously issued. A. Operating activities. B. Investing activities. C. Financing activities. D. Inflow. E. Outflow. Correct answers. C. Financing activities. E. Outflow. Buying back previously issued preferred stock is a financing activity because it affects the company's capital structure. Since the company is spending cash to repurchase shares, it's classified as a cash outflow. Which of the following is not a cash inflow? A. Acquiring a loan. B. Decrease in accounts receivable. C. Selling shares of stock. D. Paying the principal due on borrowings. Correct answer. D. Paying the principal due on borrowings. A. Acquiring a loan, cash inflow from financing activities. B. Decrease in accounts receivable, cash inflow from operating activities, more cash collected. C. Selling shares of stock, cash inflow from financing activities. D. Paying the principal due on borrowings, cash outflow, not inflow, as it involves repaying debt. So, D is not a cash inflow. Which of the following carries out the responsibility/IES of a controller under the finance division? A. Controls the coming in and going out of cash in the organization. B. Formulates a cash strategy. C. Responsible for overseeing the budgets and investments of the company. D. Supervises the preparation of the accounting reports of the company. Correct answer. D. Supervises the preparation of the accounting reports of the company. The controller is primarily responsible for the accounting functions within the finance division. This includes preparing and supervising financial statements, ensuring accuracy and compliance with accounting standards, managing internal controls and financial reporting. Let's break down the other choices. A controls the coming in and going out of cash. This is typically the treasurer's role. B formulates a cash strategy, also falls under the treasurer's responsibilities. C oversees budgets and investments, may involve both treasurer and financial planning analysts, but not the controller, directly. So, D best describes the controller's core duties. 23. BB Corporation, a reputable baby food manufacturer, is planning to establish a new production facility in Cebu City. To fund the project, CFO BD develops a financial structure composed of 50% debt financing, bank loan, 30% equity financing, stock issuance, and 20% internal funding, company reserves. Which type of financial management decision is primarily reflected in her strategy for funding the expansion? A. Dividend decisions. B. Financing decisions. C. Investing decisions. D. Operating decisions. Correct answer: B. Financing decisions. CFO BD's strategy focuses on how to raise funds for the new production facility through a mix of debt, equity, and internal reserves. This is a classic example of a financing decision, which involves determining the best capital structure to support business growth. Let's quickly rule out the others. A. Dividend decisions concerned with distributing profits to shareholders. C. Investing decisions involve choosing where to allocate funds, e.g., building the facility itself. D. Operating decisions relate to day-to-day business activities. BD's plan is all about funding, so B is correct. 24. While evaluating the financial health of a business, the financial manager prioritizes tracking actual cash movements, inflows and outflows over net accounting profit. This strategic focus is primarily intended to safeguard the company's A. Liquidity, B. Profitability, C. The ability to pay dividends, D. The ability to acquire new assets. Correct answer: A. Liquidity. Tracking actual cash movements rather than just accounting profits is a strategy aimed at ensuring the company has enough cash on hand to meet its short-term obligations. This is the essence of liquidity management. 25. Maria Rosie entrusted 10000 to Fab Financial, a firm known for accepting deposits from individual clients. Shortly after, Fab lent the same amount to Glam Corporation for its expansion efforts. Based on the financial transaction described, which characteristic best supports the classification of Fab Financial as a depository institution? A. Its ability to issue equity to raise funds for lending. B. Its direct investment in business ventures for capital gains. C. Its intermediary role in mobilizing public deposits into loans. D. Its authority to manage pooled investment funds for clients. Correct answer: C. Its intermediary role in mobilizing public deposits into loans. Fab Financial accepts deposits from individuals, like Maria Rosie, and then lends those funds to businesses, like Glam Corporation. This is the hallmark of a depository institution, which acts as a financial intermediary channeling public savings into productive loans. 26. Consider the following two statements regarding the nature of financial instruments. Statement 1. In every case, financial instruments give rise to a financial asset for one party and a corresponding financial liability for the counterparty. Statement 2. Financial instruments may result in a financial asset for one party and either a financial liability or equity instrument for the other party, depending on the contractual terms. Which of the following best reflects the validity of these statements? A. Only statement 1 is correct. B. Only statement 2 is correct. C. Both statement is correct. D. Neither statement is correct. Let's analyze both statements. Statement 1 claims that every financial instrument results in a financial asset for one party and a financial liability for the other. This is too narrow. It ignores cases where the counterparty issues equity instruments, e.g., shares, which are not liabilities but ownership interests. Statement 2 correctly acknowledges that a financial instrument may result in a financial asset for one party and either a financial liability or an equity instrument for the other, depending on the contractual terms. This aligns with accounting standards like IAS 32, which distinguish between liabilities and equity. So, Statement 2 is accurate and more comprehensive. B is the correct choice. 27. In financial system, certain entities play a vital role by reallocating capital from surplus units, savers/investors, to deficit units, borrowers, thereby facilitating efficient capital flow and economic growth. Which of the following best defines a financial institution whose core function is to act as a conduit between these two parties by transforming savings into investments? A. Depository institutions. B. Financial intermediaries. C. Financial institutions. D. Financial institutions. Correct answer: B. Financial intermediaries. The question describes entities that reallocate capital from surplus units, savers, to deficit units, borrowers, a classic definition of financial intermediaries. These include insurance companies, mutual funds, pension funds. They channel savings into investments, promoting capital efficiency and economic growth. 28. After analyzing the annual cash flow report, Joy Segovia, financial manager of PNSCO, observed a positive net cash position indicating that total inflows exceeded outflows for the fiscal year. As part of strategic financial planning, she must now decide how to allocate the surplus cash. Which of the following courses of action would represent the least effective strategy in promoting the company's growth and maximizing shareholder value? A. Deposit the excess cash in a low-yield bank account. B. Extend short-term loans to earn additional interest income. C. Reinvest the excess cash in income-generating market securities such as stocks. D. Acquire long-term productive assets like machinery and facilities to boost operations. While parking surplus cash in a low-yield bank account may offer safety and liquidity, it's not an effective growth strategy. It generates minimal returns and does little to maximize shareholder value or enhance operational capacity. Strategic financial planning aims to deploy surplus cash in ways that generate returns, expand operations, or increase shareholder wealth. Option A is the least effective in achieving these goals. 29. A firm's management team is analyzing how operational efficiency, investment strategies, and financing activities influenced its liquidity throughout the fiscal year. They refer to a financial statement that details cash inflows and outflows, categorized by business activity over a defined accounting period. Which financial statement provides this structured cash-based insight? A. Balance sheet. B. Statement of comprehensive income. C. Statement of financial performance. D. Statement of cash flows. The statement of cash flows provides a detailed breakdown of cash inflows and outflows categorized into operating activities, day-to-day business operations; investing activities, asset purchases/sales; financing activities, loans, equity, dividends. This statement helps management assess liquidity, cash management, and the impact of strategic decisions over a specific accounting period. Let's rule out the others. A balance sheet shows financial position at a point in time, not cash movement. B. Statement of comprehensive income focuses on profit, not cash. C. Statement of financial performance, another term for income statement, again profit-based. For cash-based insights by activity, D is the definitive answer. 30. ABM Corporation reviewed its financial records and noted substantial cash disbursements for inventory purchases and employee compensation during the period. These transactions reflect the company's day-to-day core operations. In accordance with cash flow reporting standards, under which section of the statement of cash flows should these payments be recorded? A. Cash flow from operating activities. B. Cash flow from investing activities. C. Cash flow from financing activities. D. Summary of cash flow movements, net change in cash. Correct answer. A. Cash flow from operating activities. Cash payments for inventory purchases and employee compensation are part of a company's core operational processes. According to standard cash flow reporting, these are classified under operating activities includes cash transactions related to producing and delivering goods/services, such as receipts from customers, payments to suppliers, inventory, payments to employees. Other operating expenses